Welcome to another edition of Around the Table with Stacy Smith as we take a look at the economy and investing. The mood on Wall Street for investors has been a lot better now than it was just a month ago. How well have the markets performed? Well, I asked that question because I happen to know the answer. In the last week of October, the markets had dropped significantly from their highs in July, but in less than a month, with three major indices all now within a percentage point of those July highs. And for the year, the gains have been healthy, with the S&P 500 up nearly 19% and the Nasdaq up nearly 36%. So those numbers should put smiles on my panel of analysts here and financial advisors. And so let me introduce them to you now. With rarely a frown is Carrie Coghill. Carrie is the president and CEO of Coghill Investment Strategies, which is headquartered here in Pittsburgh. Carrie has been recognized by Forbes as one of the top women wealth advisors in the country. Also seated at the table is Frank Rossetti. Frank is the managing director of HF Management Company, which is part of an alternative asset group. And Frank's background includes 50 years in the investing field, and he helped to establish Harvest Financial here in Pittsburgh, where he was the executive chairman. Across the table, we find Kim Forrest. Kim is the chief investment officer and the founder of Boca Capital Partners. Kim has a dual background in both finance and in software engineering, and you may have seen Kim in her many appearances on Fox Business, also on CNBC and Bloomberg. And there's one more seat at the table, and that is where we find Michael Godwin with Fregasso Advisors. Michael has a solid career in investing and is the chief investment officer for Fregasso Financial Advisors. And again, this year, we should note that Fregasso Advisors is listed among the Barron's top national 100 independent advisors. So I want to thank all of you once again for joining us for Around the Table. We hope that you had a great Thanksgiving. Nod your head, yes or no, smiles, frowns. I'm hoping we got nothing but smiles today with the way the market's been. Well, the markets have been moving higher as investors are betting the economy has turned a corner. And investors also believe the Fed is done raising interest rates and perhaps will start to lower them in the coming year. However, we are also in the holiday shopping season, and 70% of the U.S. economy is driven by consumer spending. So, Carrie, the first question goes to you. How crucial is this year's holiday shopping season for the economy?
Well, I feel like it's, Groundhog Day every year because we do really focus on the holiday shopping season. And every year you'll hear analysts say it's very important, and it is very important. I don't know that it's any more important than it was, in past years, but we surely can come up with some ideas about why it may be. First of all, in every year, there are many companies that derive about 30% of their sales during the holiday season. So if you own any of those companies, whether it be retailers or suppliers to retail stores, you really need to pay attention to how the consumer is behaving. And that's really what we're looking for, Stacy, at the end of the day, is what is the behavior? Are consumers looking for deep values and bargains? Or do we see the higher end brands, people spending and splurging on themselves? So those are the things that we're really going to watch. And even more important is how people are paying for their holiday shopping. Are they continuing to use credit cards? Are they continuing to deplete their savings? All of these things will help us to be able to assess how strong the consumer may be going into 2024.
At this time, the early returns, and they are early, there will be constant adjustments to these guesses. To Carrie's point about how people are paying, there's a higher percentage than normal that are using buy now, pay later strategies, they think, at this point in time. Of course, this is after one day of shopping, Black Friday, which is, all right, and I guess the weekend. I don't know if they've got those numbers in or not. But at this point, the sales are up. People are bargain hunting, and they're borrowing the money, one directly or indirectly. Not so much with credit cards because the interest rates are a lot higher, but more so with the buy now, pay later strategy. And it'll be interesting to see how that plays out into the future if it continues.
If you look back last year, and this is the time of year when banks and pundits put out their forecasts for the following year, I can't remember one bank that said we weren't going to have a recession in 2023. And I actually thought we would probably have a mild recession this year too. So I was in that camp, but it's pretty remarkable how resilient the consumer has been so far this year. But I do get a little bit worried. I don't want to be the resident Debbie Downer on the show, but I do get a little worried because one, you are seeing credit card balances actually the highest they have ever been right now, at a time when the credit card rates, as Frank mentioned, are the highest they've ever been too. So consumers at some point, Stacy, are going to get stretched. They're going to run out of the excess savings they have. They're going to have to tighten their belts at some point. But will we get another good holiday season out of this mix? Hopefully the good times can keep rolling. But at some point when they have to tighten their belts, we hope they don't have to tighten them too much.
We've gotten some recent data that suggests there was a pullback in consumer spending in October. And maybe they were just saving it up, for Christmas or holiday season. We'll see about that. Another troubling thing, and I'm usually, whatever the opposite of Debbie Downer is, Susie Sunshine. I'm usually like all about the future and how we'll just figure it out and the world will be better tomorrow than it is today. But there are some caution flags that are coming up, especially in the highest level of retail. The retailers just reported in the last couple of weeks, and mostly due to China, some of the larger luxury brands like Burberry and LVMH and that kind of level of luxury really got hit. But that was mostly because of China. But we will see in this next month whether or not people are spending up for their loved ones and themselves, or if they are going to reward maybe the dollar stores and the less aspirational kind of purchases that go on at this time of year.
Does it make any difference whether they're buying at the brick and mortar store or if they're doing it online? Because early indications were that consumer spending by internet or whatever you want to call it has gone up this year, and maybe brick and mortar is starting to see another decline. Okay.
I don't think it matters,
okay.
But I do think if you're going to invest in a retailer to have the omni-channel, and that means however that customer wants to buy, whether it's a store or online, you need to have that omni-channel. If you're a good retailer, have your shelves stocked with stuff that people are going to buy and let them buy it whatever way they want.
Yeah, I agree with Kim there, Stacy, real quick too. But the other thing to think about is the dollar amount that people are buying. You said it's gone up since last year. That might be true, but the quantity that they're buying might not be as much, just because inflation has been so high over the past number of years, right? So you may be buying a pair of pants that costs $100 now, but it only costs $70, but you're still only buying one. So the quantity might not be going up nearly as much as the dollar amount. So at some point, again, that's got to come to an end.
One final note, if I can ask this, and go ahead, Michael, you can answer it. When we talk about showing increases, we're talking about over just last year.
Right.
Is that right?
That's correct. So yeah, year over year, the fact that inflation's coming down from 5 to 3.5 is great, but 3 years ago, prices were here and they made that huge jump over the past couple of years. And you're never going to see prices as what they were back in 2019, early 2020.
Right. All right. We have to take a break. We'll be back in just a moment.